All right, great. Now let's finish up IFRS 13 on fair value measurement. So next thing we're going to look at is valuation techniques. What are the valuation techniques under IFRS 13? Remember I said that for fair value is what we look for an active or principal market to calculate or determine our fair value. But there are some special circumstances that when you have some assets, they don't have a what? They don't have a market. So when you don't have a market and you want to fair value, what do you use? What you call your valuation technique. This is also another area that is very, very testable in the exam, valuation techniques under IFRS 30. It says now, the objective of using a valuation technique is to estimate the price at which an orderly transaction to sell the asset or transfer the liability will take place between market participants at the measurement date under current what? Market conditions. So we're saying that in case you don't have a market and you still want to calculate or determine fair value, what do we use? We use what we call our what? Our valuation techniques. Okay, now IFRS 13 requires that one of three valuation techniques be. So we have three valuation techniques under IFRS 13. We have market approach, cost approach, and income what approach. So we're going to look at the three together. So let's start from the first one. What is market approach? Get your writing materials and get this down. Market approach. Market approach uses prices and other relevant information from market transactions involving identical or similar asset and what? Liability. So under market approach, what do we do? We use prices and other relevant information from market transaction involving identical or similar asset and what? Liability. So we look for what? A similar asset or a similar liability to the one we want to fair value. And we use the market or the price of that particular asset or liability as our own what? Asset or liability. Let me give an example. We want to fair value a Toyota Corolla car and there's no market for a Toyota Corolla car. What can we do? What is the closest model? We have Toyota Camry. So we can use the price of Toyota Camry in place of the price of what? Of Toyota Corolla. That's what I call your market what? Approach. Another example is you want to look at the shares of Guinness PLC on the Nigerian Stock Exchange, and Guinness PLC is no longer quoted on the Nigerian Stock Exchange. Hypothetical example. So what do? You can go to what? You can go to the Ghana Stock Exchange. If they have the Guinness PLC shares quoted there, you can use that as what? The value for your own what? Guinness PLC shares. That's market approach. Let's look at the second approach called cost approach. What is cost approach? It says now, we look at the amount required to replace the service capacity of an asset, also known as what? Current replacement cost. So this one we use the most times when we are doing for what? For maybe plant and machinery, like we constructed the plant, we want to determine the fair value. Current replacement cost is if you want to replace this asset now, want to rebuild or want to do another one, want to replace it, how much is it going to what? Cost us. That's what you call your what? Your cost approach. Then the last one is income approach. Under income approach, very simple, we just convert future amount of cash flow into a what? A present value. That means we discount future cash flows to a present value, future cash inflows or profit to a present value, and that's our what? That's our value. This income approach we are going to use this when we get to IFRS 9 on fair value measurement. So you see practically when we get, I will remind you that I told you IFRS 13. So this is how we do it what? Practically. Okay, now an entity must use a valuation technique that is appropriate in the circumstance and for which sufficient data is available to measure fair value, maximizing the use of relevant observable input and minimizing the use of what? Unobservable input. A valuation technique should be used to maximize the use of relevant observable input and minimize the use of unobservable input. Quoted price in an active market provides the most reliable evidence of fair value and must be used to measure fair value whenever what? Available. All right, great. Okay, now let's look at what you call bid or offer prices. Okay, it says now, for some asset or liabilities, the market quote prices depending on whether the asset is being sold to or bought from the what? Market. So I've explained that you have some special forms of market where the price you buy an asset, the same asset different from the price you what? Sell the asset. The price at which an asset can be sold to the market is called the what? Bid price. When we say bid price is the price the market is willing to buy the asset from you. That is how much you can sell the asset for. It's called the bid price. While ask price is the amount the market is offering to sell the asset to you, or the amount you will buy the asset in the market. Okay, now when we are calculating fair value, when you have market like that, we use what we call the bid ask spread. That means we calculate an average between our what? Our buying and selling price, and that will be our what? Our fair value. Although in the past what we used was that if you are fair valuing a financial asset, you use your bid price, and if you are fair valuing a liability, use your what? Ask price. But now the standard says that you do what? You use a spread. That means you calculate an average between the two values, and that will be your what? Your fair value. Now, very important, fair value hierarchy. I don't know what it is with ICANN examiners and this question is if they like this question so much, fair value hierarchy. So we're going to look at what we call fair value hierarchy. Okay, it says now, IFRS 13 establishes a fair value hierarchy to categorize input to valuation techniques into three levels. So all those valuation techniques we have, the market, the cost, and the income approach. When it comes to the input we use for them, we have divided them into three categories or three levels. It says now we have level 1, level 2, and level 3. So we're going to look at it now. Let me explain this before I explain these levels to us. Please, in the exam, if they ask you for this particular fair value hierarchy under IFRS 13 when it comes to input for valuation techniques, please, I can expect that you replicate this table almost exactly the way it is for the 3 or 4 or 5 times that's come out before, like exactly like this. If you check the solution, this was exactly what they had in the solution. So please, if you can memorize this is what they expect you to write in the what in the exam as the fair value hierarchy under IFRS 13. So we have level 1. Level 1 is what you write. So you just do like a table. You have definition and you have example. So level 1 is you have quoted prices in active market for identical asset or liabilities that entity can asset at the measurement date. So for level 1 is that we're going to use our market approach. That is, what are the prices that we can find for a similar asset or liability, like I explained on that market approach. Example is, if you want to look for a share price, you can look at the share price quoted on the London Stock Exchange. For level 2, inputs other than quoted price included within level 1 that are observable for the asset or liability, either directly or what indirectly, e.g. quoted price of a similar asset to the one being valued or quoted interest rate. Then the last level is inputs that are not observable. That means these ones are not, you don't have a place where you can actually observe those inputs. Example is when you use your cash flow projection. So please, these are the three levels under what fair value hierarchy in what IFRS 13. And with that, we've come to the end of what IFRS 13. All right, great. So I hope we have understood very well IFRS 13. Is not so complex a standard, but it's also a testable, examinable standard. All right, no problem. So then you have your practice question. So please attempt the practice question and send the solutions to me so I can grade it and then get back to you on how you are supposed to do better and score better marks in the exam, if there are ways you can actually do that. All right, great. Thank you very much.